Hello and welcome to the Retire Wealthy and Happy podcast. Today we have Damion Lupo, who is the CEO of FrameTec and the founder of eQRP. How are you doing today, Damion?
I'm good, Roger. It's good to be here.
Thanks for being on the show. We're excited to hear about some of your stories. Why don't you start with giving some of your bio, your history, personal and business to us?
Yeah, absolutely. So I'm a guy that has entrepreneur veins. I can't help it. It's one of those things. Whenever you have entrepreneurial blood, you just tend to go out there and find problems and start solving them with businesses wrapped around them. And that started when I was 11. I had my parents telling me that we didn't have any money, and I wanted to play Nintendo games. So I went out and said, "All right, I'm going to go figure out a business to go buy and sell Nintendo games." And really, just because I wanted to play the games. And that turned into me starting a bookstore in college that got me thrown out of college because I put the other bookstore out of business. They didn't really like that very much. And they said, either shut it down or we're kicking you out. And I said, well, this is paying for school, so I'm not shutting it down. And they said goodbye. So I said, well, this is probably not where I'm supposed to be in college, in a traditional, like, become a cog in a system. And that, a couple of years later, I found real estate. I was selling insurance with an insurance agency in the late '90s, and I found one of those books. It's called Fast Cash and Quick Start Real Estate by Ron LeGrand, and read that at the same time I read Rich Dad Poor Dad. And I went and bought a house on a credit card, and that's what got me started in real estate. And that turned into this amazing process where I became a multimillionaire, and it was all good until 2008 when my ego took over, and I went from 20 million to negative 5 million in 12 months. And I thought I had the world by the tail. I was driving a Ferrari. I had 150 houses, and everything went away. Like, lost the money, lost my house, lost my girlfriend, lost my dog. I mean, it sounds like a damn country song, but it really was. I was like, I was living the dream inside of Nashville, and then I had to really go through a process that took 4 or 5 years to really understand what happened. Was it just me losing money, or was it me being off purpose, off mission? And what I realized was I really didn't have a mission except for money. And I see a lot of people in that same space where they're chasing money and they're not really chasing a purpose. I see other people chasing their passion and saying, I'm going to go do the thing that I love. Because we hear that all the time. People say, go do what you love, and everything else will follow you. And I laugh, and it's not true. You can't just do what you love. I mean, if that was the case, we'd all be eating Lucky Charms and watching cartoons, or at least that we'd think that, because as a kid, that's what we like to do. And so I think that there's a big shift that I made, and I think it's useful for people to think about when they're deciding that where they're going to spend their time. And is it chasing more money, or is it chasing some type of mission or purpose, and not just a passion that's fun? Because I can tell you, there's a lot of things that we do that to build success and significance that are hard. There's a grind, and it's not just all fun. A lot of that stuff actually requires sweat and blood, and that's part of the process, and it's deeply fulfilling.
That's awesome. Well, you said you started in real estate. What have you moved on to now?
So over the last 25 years, I've started and run over 70 companies, and they've ranged. I have a precious metals company that's actually was originally started by my dad back in the early 70s. It's in its 51st year. I've had insurance agencies, lots of different real estate companies, a retirement company called eQRP that I founded, now is being run by Parker Purcell, who you've had on the show, and then have a private equity firm with my partner David Morris, and we've gone out there and looked at unique, sort of off the norm type of opportunities. We had a fund that we started called M&M. It was precious metals, so it was gold and silver and mini storage, and that turned into a crypto fund. And we've done some other things in land development and in technology and software technology, and ultimately that led us to finding the deal that I think will probably put us on the map and disrupt the entire construction industry, called FrameTec. And that's the most exciting thing, when you can go through all the things, sometimes wondering, why in the world am I doing this thing? And realizing it was a stepping stone to the thing that you're probably meant to be doing, but you have to go through the other stuff first. Like, you can't just start on third base. Like, you got to swing a bunch of times, you got to strike out, you got to go to first, and then you get taken out. And ultimately, FrameTech is the grand slam, and it's something that looks like an overnight success story. 2 years ago, it was an idea on a napkin, and today it's an enterprise that's worth $500 million, and it's a company that was based on a mission to disrupt the construction industry that really doesn't get innovated. And it's the last big innovation in construction was the nail gun about 50 years ago. So we've created a process that with very, very talented people that takes the building a house, the framing of a house, instead of it being a 2.5 month process, we've turned it into a 2 week process. And we're doing it with virtually no waste. So if you think about a house that's being built and you look at it, you see a big dumpster full of trees that are going to the landfill. And in our process, you have almost nothing going to the landfill. And so this is what happens when you go through a whole lot of things and you keep growing and you keep innovating and you keep falling on your face and not quitting. Eventually, I think it ultimately leads us to the thing that we're supposed to be doing, but we have to go through the things that don't make any sense for sometimes many years.
That's really cool. So on FrameTech, I've been in the construction industry for a long time. It sounds like you're basically going to be sending out parts that are already built so that people aren't like cutting the individual framing components. Am I on the right page on that?
Yeah, so it's completely vertically integrated. So imagine you have a design for a house, whether you're an individual or you're a builder with 50 or 100 houses, and you say, okay, next step is we want to build the frame. So that's the next thing: your walls, your floors, your roofs. What we do is we take those plans, we convert them into our CAD system, and then we build all those pieces, the floors, the walls. These are custom. This is not a prefab like a manufactured house. It's your stuff, whatever you want. And we're building it in our plant. And then our team takes it out and puts it up on your site. So when we bring it out, it takes us a day to 2 days to actually put the entire framing up, and you're good to go. So instead of it taking multiple months, it takes a couple weeks for the entire process, and it's very predictable. So you get to know exactly when you're going to have it framed and done. You don't have to go try to find framers, which is really hard now. It's hard as hell to get people to swing a hammer in the heat and the rain and all the elements, and all of that's taken out of the equation. So as a builder, you get to predict, here's the day that my house or my apartment is going to be done. And then you put all your electricians and plumbers and you put them on the schedule and they're right behind it. So it takes the headache out. That's one of the biggest hassles, is the trusses and all the framing. And we've taken out the entire thing so that people can build the house and focus on that and have predictability. And when you build something in a manufacturing facility, your tolerances are super slow or super tight. So you don't really have the deviation that you'd have if you're building and swinging hammers on site, where you have things that are off an inch. You're not 16 on center. You're literally having inspectors saying, "Why did you build it this way?" And you say, "Well, I guess my framer was maybe a little hungover." And so none of that stuff happens with FrameTech. It's very predictable and the highest quality. There's almost virtually no waste. The entire plant is either leads gold or leads platinum. So virtually no energy because it's all solar being taken off the grid. So it's just a really cool product and process and thing that serves everybody. All the stakeholders win. So it's pretty cool to be a part of.
That's awesome. I imagine it's growing like wildfire right now. But as of right now, where's the plant and how far do you travel to do that?
So the first plant is the first two plants are in Arizona. The first one comes online this year, 2024, and the second one comes online about 18 months after that. Between the two of them, they will serve the entire state of Arizona. The plants, it's kind of like mattresses used to be. They have about a 200-mile radius, because you can imagine shipping all of the trusses and walls and everything on a truck. You're not going to drive your stuff from Arizona to Maine. The cost, and it would be crazy. So what that means is that the first two plants are here, and then we have our target markets in the middle of Texas and the Waco area. There's potentially other places, but we've got those main markets that will cover about 100 million Americans.
Very cool. I love it. And that's going to be interesting. And wish you luck with that. And look forward to seeing frame tech houses in our neighborhood here in Utah. Why don't you tell us a little bit more about eQRP?
Yeah, so eQRP was this idea about a decade ago. I was watching a lot of people, including my parents, that were retiring, and they were retiring basically afraid. They were afraid of what was going to happen in the stock market, and they played by the rules. Most people play by the rules, and then they just hope they don't run out of money, which is really frustrating. In fact, I remember even like a few weeks before my dad died, he just looked at me and he said, there were so many things that I wanted to do, and he didn't get to do them. And a big part of that was he didn't have the resources, and he didn't have the trust that he'd have resources. So he just didn't do things. Most people, I find, are hesitating to do the things. And it's primarily because they don't have the resources that would make them feel comfortable in going out and experiencing the life that they want. And seeing that all over the place and realizing that money is really modern day slavery. People don't know how to work with it. They just are told, hand it over to somebody else and they'll manage it. And I'm watching the whole population in large part being afraid of it. So EQRP came up, it sort of bubbled up after I started studying the tax code and looking at retirement accounts, because most people have their house, their social security, and a 401k. And that's the 401k ends up being what they're really going to stand on, because social security I mean, it's minimal and they're not going to eat their house. So ultimately, if they're going to do things, it's going to be out of their retirement account. And there are different ways of doing it. I mean, you can literally hope that it all works and you hand your money to a financial advisor and they're going to fee you to death, and you're going to retire and you're going to have less money than you really wanted to. And probably you're going to start using it in the middle of a stock market correction. So it's not really a good plan for people. And there's ways to use it that people aren't taught, using Roth accounts that you and I've talked about before. And ultimately you can do things outside of Wall Street. EQRP gives people all these choices. It gives people the choice and the control to be able to invest the money in things like apartments or Bitcoin or gold or FrameTech or almost anything they can imagine. And you're not beholden to the Wall Street and the system there that fees you and just basically eats you. So that was what EQRP was envisioned to be. It was a place for people to have real control, and ultimately a team that supports the people breaking out of the ignorance, because quite frankly, we're not taught about money or investing in school. We're not taught about it from our parents in most cases. And so the team is meant to educate people and bring people together. We just had a big party with a bunch of investors here in Arizona this last week, had 100 people coming out, and we're bringing people together, creating community and teaching them and then empowering them so that they're not doing it by themselves and they're not having somebody do it for them. We're literally doing it with them. And that's what it's all about. It's about building a community and empowering people, and then ultimately helping them break their own financial shackles so that they can make those choices and not end up dying with regret.
Yeah, it's awesome when you can partner up with other people and you get the synergies that grow into other things. And sometimes you'll be busy and you'll look up and somebody else did it. And sometimes somebody will come up with an idea that you never thought of, and you can really go a lot further and faster. So that's great. What would somebody do if they were going to invest in a business with their retirement funds to vet a business and know if that was good for their retirement funds?
Well, ultimately, whether it's your retirement funds or your personal funds, it's the vetting and investment. The business is really the same process. The great thing about a retirement account is that you can do it and you can invest and potentially pay zero tax on anything when you're growing your money and when you spend your money. So the primary thing is the people that are executing the business, and that's one of the things that's missing. I think in large part when people are trying to figure out what to invest in, they're looking at the deal instead of saying, okay, who's actually operating this deal? They look at the apartment or they look at the business and they say, this is a great idea. Well, ideas are only worth about 1 to 3% of the overall deal. It's the operators, it's the actual execution. That's where all the juice is. That's where all the value gets created. And quite frankly, when you have the problems, that's who solves them. The deal doesn't solve its own problems. You got to have people that have been through the ringer. One of the things that I think is really important right now is you got to have people that have been around a while. At least some people on whatever team that's running a deal have got to have been around for more than 5 or 10 years, because they haven't seen cycles. Like we're seeing that in real estate right now. You've got tons of people that have only experienced a bull market. All they've seen is low rates or rates going down. And so in reality, things cycle. So I've been investing and running businesses for a quarter of a century. I've been through multiple cycles. Right now, we've got one of the things that's happening, we've got this crypto thing going on in the world. And I've been through multiple winters. Most people don't even know what a winter means. They just think, oh, look, Bitcoin has gone up 400% in 4 months. Well, it's the same thing with anything. When you have the experience, you've got a wisdom and innate intelligence to where you can see what's coming because you can feel it. And that's the key to investing with people that can see things around the corner because they've been through them. That's what you're looking for. When you're trying to figure out what deal to do, it's doing it with the people that can see around the corner and they can anticipate things. That's what you should start with. The deal is secondary, which is crazy because most people go, well, this deal is great. I'm like, well, who's running it? I'm not sure. But the deal it's real pretty. I mean, that's not the right question. The question is, who's going to make this thing work and who's going to drive it and guide it and corral it, get it to go where you need it to go and fix the problems.
Yeah, we are about to have another best ever conference that's here local to Salt Lake City, put on by Joe Fairless, and it's meant for apartment syndicators. And last year we started hearing what was happening from Neil Bawa, and he was talking about the billions of dollars of apartments that are going to be going into foreclosure. And that was kind of a news to us then. It was definitely more of a, well, I wouldn't say crystal ball, but he definitely looked at it and saw where the problems were going to be. So when you say you look at the deal and that's only a small part, right now we're about to see a bunch of foreclosures. And those of us that are syndicating have pivoted and done our best in operations to make sure that we're doing everything to keep the deal good, even though it would have just been a screaming home run with everything being the same back in the day. So I definitely feel that.
Yeah, I think that everybody's learning that that there is gravity involved, and a lot of people didn't really experience gravity. When you have a bull market, it's like, oh, everything works, everything doubles, everything goes up, and things do. That's the nature of markets, and a lot of it has to do with psychology. There's greed and fear, and there's the stages of psychology that you can Google and understand where we're at. And ultimately, you really want to be looking at things deeply when there's a lot of fear. When everybody's excited, when everything is going up, that's usually a pretty good sign that you're about to get smashed. And you know, one of the things that Neil shared about, I've been spoken with Neil and been at events with him for years, and he's accurate in his predictions, and it's fairly obvious that when you have rates going up, you're going to have assets declining in value because the cost to actually trade those assets gets really, really expensive. And ultimately, your free cash flow that drives the value of the property goes way, way down. So, right at this point, we're seeing a ton of apartments and a lot of other assets that people have syndicated where the value of the thing is less than the debt. Well, there's almost no way to fix that unless you have a lender that lets you drive the thing and says, okay, we're going to hold on for a few years. So ultimately, most operators don't know how to operate bad assets. And so lenders are going to say, forget it. And they are going to foreclose, just like Neil predicted. And then I know that I have friends that have syndicated and they're good operators and they're dealing with their lenders, they're negotiating and they're working with the lenders and they're keeping the assets and their investors are not screwed. So, but they also are very open and transparent, which is very unusual because usually when things go bad, everybody wants to hide. I mean, I know what that's like. 15 years ago, things went off a cliff and I wanted to hide. And that's not good for investors. It's not good for trust. So hopefully people have syndicators that are communicating through the good and the bad, not just, hey, we made money, but hey, we're getting hammered and here's how we're working through it. That's one of the greatest things that anybody can do because reality is investments have risk. The truth though is that people, I think, respect the transparency and the openness and the honesty. And it's not just about making returns all the time. It's about knowing that somebody's going to work their ass off even when things get hard.
Absolutely. And when you communicate, it's not just an operator needs to communicate with their investors, it's also they're openly communicating with their mortgage guys, their insurance people, their property managers. And when you look at the communications, we are doing a lot of asset management that people just don't often understand. Like I hired a property manager and they're doing their job. Well, if I look at your deal, you're not actually talking to them. The property manager's not actually doing anything. It's at 55% vacancy 2 years into the deal. And why? Like you're not calling them. I would have called them like every single week over that, time period. You haven't even like complained. You're not getting any money out of the deal. It's falling on its face and nobody's even communicating to the property managers. And, the property managers are definitely more likely to oil the greasy wheel or squeaky wheel, excuse me, because if you complain and complain and complain, eventually they don't want to hear another complaint and they fix the problem. And we get quite a long ways with that.
I think that's a really important point that you're making that when something doesn't seem right, it's important to voice your concern and not just sit back and wait and watch and hope. Like smoking a bunch of hopium is not a good strategy, whether it's fixing a problem or making money when have enough money when you retire. Like you've got to take responsibility for your money. And what I've seen, Roger, is a lot of people abdicate responsibility. They just say, well, so and so is going to take care of it, or it'll all work out, or I guess we'll just see. Let's see what happens. And I go, that is the dumbest strategy I've ever heard of. And people do it all the time because they don't want to engage because it's work. And you know what work is? It's a 4-letter word. So nobody wants to do it.
Yeah, and you get so busy. And when do you do the things that are on the back burner? You know, the front thing, you put out fires, and then the middle stuff you work, and then the other stuff, it's like even harder to take care of rental properties if you're doing your own property management. It's even harder to go in there and actually do it right. If you're not in the trades, you can't go in there and necessarily know how to fix a toilet or a dishwasher or a faucet or whatever. And then you start, postponing it, and pretty soon you're an unhappy landlord that wants to get out of it.
You know what? One thing that I saw along those lines, I saw a video with one of it was the managing partner for syndications by a fairly well known syndicator and national syndicator, did a lot of seminars and things. And this is common. And he voiced he was voicing his apologies around the messiness of what basically he had run the portfolio into the ground by cross pollinating all the cash into different accounts. And it was a big mess. And one of the things he said that stuck out to me, and I think it's really important for people to think about, he said, I ran myself. I was too thin. I took on too much. I didn't have the time. And unfortunately, that's one of the problems with smaller operations. And I remember going through it where I was like doing everything and like trying to figure out how to replace a toilet and manage people's investments and all this other stuff. It's something to think about when you're considering investing. Does the team have enough bandwidth? Are they big enough to have people doing the things, or is the managing partner also going to be the plumber? And that's a problem. So really, just because the deal is sexy doesn't mean the team is built out enough, and it's hard because when you're small, you don't have the money to be able to do it. So it's just something. It's part of the risks. When you think about the risks involved in a deal, having a very small team is a risk. It means small teams can move nimbly, but they also have limited capacity. And oftentimes that you have people doing things that they're probably not very skilled at. Whereas a bigger team, bigger operator, guys like Grant Cardone, for example, that have $4 billion under management, they have massive teams. Or Kenny McElroy. There's a difference, and it's something to consider. It doesn't mean you shouldn't invest with somebody that has a small team. It's just one of those risks, and we're seeing a lot of that risk play out right now, and the consequences of people that haven't built out bigger teams.
Yeah, we've absolutely seen a lot of foreclosures that we can look, from outside looking in on their deal and say, oh, they don't actually have any boots on the ground. They don't have any pre-existing relationships with property managers. They don't actually know the city or the neighborhood that they're investing in. They've done a little bit of due diligence, and yeah, that particular city looks like a great investment. But the people that actually know the city are like, oh, you would never buy in that neighborhood or across this line or something like that.
That reminds me of one of my investments back in 2005, 6. I bought an apartment in West Haven, Memphis. I thought it was, well, I mean, how bad could it be? It's across the street from Elvis's house at Graceland. And so I bought this thing. I wasn't living there. None of the partners were living there. And we would fly in about once every month or so, and we'd take a look, meet with our contractors, and then we'd send them money, and we were sending millions of dollars over to them. And they were having a great old time spending the money, partying, doing. And a year later, year and a half later, we're in the middle of this building stuff, and we have no units available. Just like everything changed. Like they painted it, and then they repainted it, and it was just like the same stuff going on over and over again. One of the things that I learned there was that when you have a project, you need, like what you said, boots on the ground. You got to have somebody there that's got skin in the game, that deeply cares and is not going to tolerate the bullshit that happens when you have people that don't really have skin in the game. Like sometimes contractors say, "Oh, look, a giant dummy outside of our area that's just going to wire us money every time we ask for it." And that's what I was. I was the giant dummy. And it's a critical piece. I've seen a lot of deals where they're pitching something, and I say, "Well, who's the operator?" And they're like, "Oh, we got a property management company." And I said, "Well, your property management company is doing everything remote. And who's actually there?" "Well, none of the general partners are actually in the area. They're all remote." And I don't like that model. It doesn't mean it can't work. It's just really freaking hard. And maybe I'm just not that good, but I also know that it's really valuable to have people that are sitting there every single day, that are in the middle of whatever the messes are, and can pay attention to it. Otherwise, you burn a lot of money and a lot of time because people don't see what's actually going on. And by the time you do see it, it's much more expensive to fix the problems. So I think that's one of the most important questions. Who's actually going to be your operational on the ground person or persons, and what's their experience and how committed are they?
It's excellent. I believe that. And as we move forward, I'm constantly looking at what a good team for apartment syndication or other is. You know, whether somebody can actually like build a team with one person or two people, or what a good team needs to be. And, you know, obviously, when you get into larger deals, you have to bring in more people to increase your bandwidth. But here in our space, I'm like pretty sure we need to have about four people in the size of deals that we've done and stuff like that.
Yeah, and it's always appropriate. You can easily you can build a too big of a team, and it just chews up a whole lot of overhead, and then you end up burning through all your cash. I mean, I've done that too. So there's this balancing act. The difference when you have an experienced operator, somebody that's run businesses, when they've been through it, they generally know how to build and how fast and who to have in early, and what the gaps are. That's the problem with people when they're brand new. They don't know what they don't know. They have to go learn it. And unfortunately, they tend to learn it with other people's money, the investors' money. And they're like, oh, well, I learned a whole lot, but I lost all your money. Well, that doesn't really help the investor. So you really want to have people that have already done it, that are not hitting the ground, with their first rodeo, like they're hitting the ground running.
Yeah, we see a lot of that where people are doing cash calls right now. Hearing quite a few doing that. And even if they aren't doing cash calls, there's deals that are going really horribly, that if you look on the socials, it's like, oh, looks like they're really knocking out of the park. But when you sit down with some of these other operators, they'll whisper in your ear, oh yeah, we're about to lose half a million, $1 million. This is how we're going to recover. This is how we're going to keep it up. And it's like, oh, and social, you're looking pretty dang good though.
Well, I'll tell you, there's an example of that, what you're talking about. And there's an operator that's went from zero to hero, a couple $1 billion of assets, and all over the country. And what I know is happening is that they have assets that have dropped down to way under their actual debt, and so they're underwater, and they don't have the cash flow. They're losing money, and they're the way that they're fixing their problem is they're going and doing additional deals. They're charging a bunch of fees for the asset to when they're acquiring, and then their management company is loaning money to the deals to try to pretend that they're not falling apart. So they're playing, it's a giant Ponzi. And unfortunately, eventually it's going to collapse. I don't think that they're going to remain solvent long enough. The market's going to be irrational longer. And it's really sad that it's their first go around. I mean, I know the operators personally, and this is the first time they've done this. They literally started doing things in 2018, 2019, and just hit literally like a rocket. But they did it based on quicksand, and they're realizing that they have a problem, but they're not sharing that, and they're pretending, and it's like they're whispering in the ears of certain people, here's what's really going on, and we know what's going on, but they're still pitching, and so they're getting people more and more sucked in, and which is really irritating. So I think that that's important to watch too. Do you have, when you're investing right now, are you investing in something that's covering up another mistake that somebody made?
For sure. And that's just, you know, super unfortunate. And that Ponzi scheme is just a, you know, band-aid at best. If somebody wanted to invest in a new company or a company in general, is there a size that you would recommend that they start? Like, not to put down FrameTech, but it's a newer company. Would you want to see like a 2-year profit and loss to know what that company was doing and see, you know, whether it was going up or getting busier, or what would you do to vet that?
So what's more important than the company is who's running the company. So you can have a company that has 2 years or 5 years or 10 years, but if you have the wrong operators, it's not really, it doesn't, you can have an apartment that has 2 or 5 or 10 years of track record. It doesn't matter if you have a bad operator. It's all about the operator. So what I'm looking at operators, what's their track record? If there's no profit, if there's no income, like on FrameTech, it's a startup, its revenue starts this year. It actually started last month. When when I'm looking at an investment, I want to know who I'm dealing with it's who is more important than what. And that's the key, because the who will drive the revenue. So there's different levels. Ideally, you've got who and what. But here's the thing that people don't realize. If you want asymmetric returns, if you want more than 6 or 8 or 10% on your money, you're going to have something that looks a little scary. You're not going to get 15, 20, 25, 30% on things that are turning like clockwork. Because what happens whenever you have something that's turning like clockwork, you have tons of money that drives down the yield. It drives up the price, drives down the yield. And so if you want something like FrameTec is a great example, because the investors are likely to see returns in excess of 30%. Why? Because they were investing something that was a napkin. It was literally an idea, and it had to be built out by people, and it's incredibly complex. So it looks risky, but the operators, the execution intelligence takes away the risk. But the market requires a return that's significantly higher than a stabilized apartment. So I think it's really important to get back to who is executing this thing. And that's what I look for more than I've seen plenty of financials, and you can make financials look like anything you want. You can make a financial or pro forma, it can be amazing. And it really has nothing to do with whether it's amazing or not. It's, are the operators amazing? And they'll make the thing. They can turn chicken shit into chicken salad because they've got that experience. But usually what you have chicken salad turning into chicken shit, and that's the problem.
That's awesome. I really appreciate that. As far as I kind of want to go down the rabbit hole that is frame tech, because it's really interesting to me. I love construction and everything else, and I've probably had, you know, similar thoughts at times, but not actually followed through and executed. When you do something like that, you're going to be needing a foundation and footing and everything else done and ready for you. Is there also a possibility of doing a 3D printer foundation so that you can really vertically integrate that portion of it too?
I think all these different technologies have the potential to be brought in. There's a lot of things that we're thinking about, and we also know that there are things that we're not going to likely do at all. Uh, and that's what's really fun right now, is there are a lot of companies that are doing things like 3D printing and more interesting tiny house modular manufacturing. So all that stuff helps solve the problem. What we're being really mindful of is staying focused on the thing that we do really, really well at a world-class level, and not getting over our skis. You see this all the time. Companies are trying to do everything for everybody. Like, you have a marketing company that says, yeah, we do everything. And the reality is they probably do everything really, really shitty instead of doing something really, really great. So that, like, we're not in the flooring or the floors themselves, but not like the foundation. We're not going to do metal studs. We're not going to be doing plumbing. At some point, some of these things could be integrated into the panels, but ultimately, we're being very careful and very narrow. And there's you've heard the term. There's the riches are in the niches. And when people say, "Well, I'm doing all this stuff," it's like, well, yeah, you're probably going broke doing all that stuff.
Absolutely. Can agree more. And if I grab like the lower level handyman and put him into doing stuff like roofing and electrical and plumbing and HVAC, then we have a lot of problems. And it's not just them going broke, it's me going broke too, paying the next guy to come and fix their stuff too. So that's
Yeah,
that's
there's
one of the
like,
themes of this particular Monday.
oh, yeah. It's always nice to have a handyman, somebody that can do a lot of different things, but you just understand that person is not going to give you the best quality product at the highest level. And ultimately, when you're investing, you want specialists. You want somebody that's a generalist that can organize overall, and then you want very, very intelligent specialists running the different things. That's the way to win. That's how you get a winning team. Very, very smart people that do really, really narrow things.
Awesome. That's great. So, Damien, we really appreciated having you on the podcast today. We're going to end with the final four. These are four questions that we ask everybody at the end of the podcast to get an overview of what they do. So, number one, what is your favorite business book?
I think that other than my books, which I love because they were so painful to do, but I love the book Mastery by George Leonard, and he passed away, but we're both martial artists, and that book is really about life, about the pursuit and process of mastery. It's not about a moment in time where you cross the finish line. It's literally all the training and the process of being in the race and being in the thing. And I think that that's something that most people have lost because they think it's just about the success, but really the significance of being in that process and falling in love with the process versus the outcome is one of the greatest joys and shifts that most people can make.
I love that. And I was thinking about the Tom Cruise movie, The Last Samurai, over the weekend. And there's a quote in there that's something to the effect of a life spent looking for a perfect cherry blossom isn't a life wasted. And so we were actually up at the Utah State Capitol looking at the blossoms yesterday, and I thought of that. So I love mastery in all things. Number two, what brings you happiness?
Being more connected to nature, which to me is being connected to God. And so I spend a lot of time outdoors, being in things that are true. I think being in nature, there's an element of non-manipulation. And when you see a tree or you see an animal, it's just truth. There's nothing there. There's no thinking into the future. There's no planning or scheming. Uh, People have agendas. Animals, they're thinking about either fornicating or eating. And so it's like that. It's pretty simple, and I just love being in that environment because I think it helps ground me and it brings me back to a deep sense of truth. I think that that's probably something useful for every human being that's alive.
That's awesome. So you like to hike a lot?
I do.
One of my favorite things too. So I can look out my window and see mountains, and I'm about 300 feet from the beautiful Wasatch Mountains and hiking and stuff. And I feel definitely like spiritual whenever I'm out and just doing that kind of thing.
Yep, absolutely.
Question number three, what ways do you give back?
So a lot of what I do is stay focused on my core thing. I think that there can be a an attraction towards going and maybe you're investing or you're building a business, and then you say, "Well, I want to do something in a nonprofit." And one of the ways I can give is to build a business where I'm giving opportunity to people for work, and I'm creating opportunities for communities with like FrameTec. So staying focused on the thing that I actually have a genius in and not getting derailed. And at the same time, the thing that I know needs financial support is this war on human trafficking. So I give a lot of money towards some organizations that fight that pretty hard, and it's a much bigger problem than most people realize. So that's got a lot of my attention today is fighting human trafficking.
I love that. And there's a lot of need for that right now, too. And then the final question, question number four, what does your future retirement look like?
It's funny because when you and we talked about this a little offline, you've got a lot of people that are in love with what they do, so that they'd say, "Well, I retire what to I love what I wake up and I'm excited," and that's generally true for me too. There are phases, and so retirement is more of I can see transition. I can see uh, more work that's really more of like gardening in different ways, gardening human minds with mentoring and gardening the outside dirt and tilling and it's slowing and there's just more stillness. It doesn't mean I'm not creating. It doesn't mean I'm stopping building things. It's a different form of it. So it's less of maybe some of the stuff that I'm doing and there's a quieting down. So my version of retirement, if you will, is more of a process of finding deeper stillness and then continuing to have the impact that God put me on this planet for. So that's probably more of what it looks like for me. There's never gonna be a stop where I say, okay, I'm sitting on a beach and drinking pina coladas every day. It's not really my thing. But there's definitely a different form of building and creating and connecting. And so I think that's what will evolve over time for me.
Do you have any plans to travel out to do this, or are you just going to stay more local, do you think?
So that what I found is, and I love traveling. I've traveled to 40 some odd countries, and I imagine I'll travel to maybe another 40 more. I enjoy being connected to more of a grounded space, more of you can call it a homebody. Like I enjoy being home. I enjoy being connected to the natural environment. I don't necessarily need to be out in every country to feel stimulated. I still love it because I think we gain a lot of perspective by being in different cultures and different environments. I love to eat the food and be confused by the language when I'm out in different countries. So I appreciate that. I also really appreciate not getting on planes and dealing with TSA. So there's a it's a mixed bag. I like being able to be home where I don't have to have somebody molesting me because I want to go see some new country, and that's unfortunately the experience that you get more and more with TSA. So I tend to try to avoid those experiences.
It's funny you say that. And the last trip I took to Belize, I went through TSA and I had my passport in my pocket, put it in the thing, it was underneath my wallet. And when it went through the conveyor belt, it was gone. And I remembered specifically where it was. And I'm like, where did it go? And they had to go like climb underneath the conveyor belt. And it somehow got out of there. Could have ruined the trip in many different ways, but somehow made it. And it was a fun trip. Well, thanks for being on the show today, Damien. Where can people find you on social and the internet?
Best place to find me on social is on LinkedIn. Just look up Damion Lupo. And the project that I think is just really useful and really fun to check out and be a part of, maybe something you want to look at investing in. And at the very minimum, it's really a great way to understand investing in general, understand what a great world class deal looks like. Go to frametech.com, check out what we're doing here in Arizona, because you're likely going to bump into it across the country as we roll out. And so it's kind of cool to be early and see what's going on and maybe even be a part of it. So LinkedIn and frametech.com are the places to see me.
Awesome. Thank you so much. We'll see everybody else in the next episode of Retire Wealthy and Happy podcast. Have a good one.